Welcome to SaaS Backwards, a podcast that helps SaaS CEOs and go-to-market teams accelerate growth and enhance profitability. Our guest today is second-time founder Ray Meiring, co-founder of QorusDocs, an AI-powered proposal management software that automates the creation of personalized pitches, presentations, proposals, and RFP responses. Ray, welcome to the podcast.
Thank you, Ken. I really appreciate being on here today. Great to talk to you.
Yeah, I'm excited to run this episode. I think there's going to be a lot in it for our listeners. But before we get started, could you please tell us a little bit about yourself and your company, QorusDocs?
Absolutely. So as you mentioned, my name's Ray Meiring. I'm the CEO and one of three co-founders of QorusDocs. Originally from Cape Town, South Africa. That's why, kind of the different accents coming through here. I moved here to the US in 2015. And QorusDocs is about pitches, proposals, and RFPs. If you've ever had the joy of, responding to an RFP document, you'll know just how time-consuming and painful those kinds of documents can be. So we apply AI into that process to help you to produce those documents more efficiently and ultimately to increase your win rate.
That's a great proposition, and I think use case for AI. I really like the things that get into workflow and labor-intensive processes.
Right.
And we get both of those in RFP response, right?
Yeah, absolutely.
Why don't we get right into where this company came from, the founding story. You guys, I guess, were operating as a consultancy.
Yeah.
And I guess, was it like consultant with Kit kind of situation?
I mean, that's where we started. Yeah, we came out of that .com era in the early 2000s through some acquisitions that had happened. And at one point, myself and two other founders, we decided we can do a lot of this stuff ourselves. And so that's where we started. We started with consultancy, and we were working with a number of the very large companies in South Africa. Right in the beginning, it was the birth of .NET, and we had those skill sets. And we would go into these big companies and we would just build what they asked us to build through that process. But we were able to get a pretty decent consultancy business off the ground. It was a great lifestyle business as well. But as we were thinking about scale, we realized, well, a consultancy business, if we really want to scale this thing, that's going to be very challenging with growing headcount and how do we get global? And of course, we were in South Africa at that time. So that's when we had this crazy idea, hey, let's build a product. This is really going to scale things for us. And of course, we made the typical naive mistake of thinking, hey, we'll build this thing and we'll put a website up and everyone's just going to buy it because it's just such cool tech. All right. But we had a lot of lessons to learn as we started moving from consultancy into product world.
Yeah. So it's sort of a field of dreams approach initially, huh? If you build it, they'll show up, right?
If you build it. And, to some extent that did actually happen to us in a very serendipitous way. But I mean, that's not how to build a scalable business. We certainly know that today.
And how did you sort of land on document generation as the thing you were going to build? Because I imagine you had some other experience as well in the consulting business.
Yeah. So we looked across this consulting business and we said, maybe amongst 10 customers that we had, where was there a consistent pain point? We probably narrowed it down to 3. We tried 1 or 2, didn't work out. But the document generation piece, it seemed to really be a very challenging piece. I mean, at the time, if you wanted to generate a document, you had to do something like run Microsoft Word on a server and automate this process. And it was an absolute nightmare to do that. So we had come up with a pretty novel way of being able to generate documents. And so we said, let's build that thing. Let's just generate documents for customers. And in the early phases of what we were doing, we were generating any document from contracts to proposals to reports. I think we did an electricity trade example in one case. It was so broad and so wide. But that's where the original idea kind of came from.
So definitely understanding your customer, which were professional services firms, right?
Right.
So understanding their needs, their pain points, things that they would quickly recognize as a problem in their business.
Yeah. I don't think we had our ICP fully dialed in at that point yet because we were just trying to build, this very broad thing. But that was definitely part of the journey, is figuring out where this was best used.
So there's a kind of a moment in time here when you had some work you were doing with Vodafone, which
Yeah,
people don't know them, global phone company, heavily tilted toward mobile, like our AT&T,
right.
probably is a good, or Verizon, two good
Yeah.
examples of who Vodafone might be like. But so you had some sales activity with Vodafone, and how did that change your product strategy? What was the influence there?
So what happened there is that we had this generic document generation tool. As I said, it covered a very broad set of use cases. And Vodafone were looking for a proposal solution. We were a South African company. They're one of the biggest European telcos. They contacted us through our website. We went across and pitched them and showed them this document generation tool that we had. And, they said, well, this is awesome, but we need a couple of things different in this. We want to use it for proposals. We want to use it for RFPs. So we need this to be in the Microsoft Office application. We need this to work with our SharePoint environment. We need 3 or 4 special features in this thing. Now we were kind of hungry and ready to do whatever it took. So we worked all the way through kind of the Christmas time that year, and we built these features into the product. And we won that business with Vodafone, and they became like our anchor tenant as we did that. They taught us so much about this use case. And that really was a pivotal moment because it changed a few things for us. Firstly, it kind of changed the product and made it very unique and very different to a lot of the other competitors in the market. But the second thing it did is it helped us to understand where our best use of this very broad document generation tool was. Because we'd been struggling to sell, this very generic product. And when we took it into that unique avenue and positioned it for proposals, pitches, and RFPs at Vodafone and learned from them as an anchor customer, it helped us understand that ICP, and it really gave us a target market to now focus on as we planned on taking this to market more broadly.
How did you cement that ICP? Because you have one customer, and I'm sure you were thinking, well, is this a thing? Is it a one-off or is it a thing? So, how did you dig in and verify or validate your ICP?
Well, we kind of anonymized what we were doing with Vodafone to start, and we started to tell that story to other prospective customers in South Africa. That started to resonate. Then we were introduced to this group called the APMP, Association for Proposal Management Professionals. Quite a mouthful. And, I never before thought that there would be an association just for people that write proposals. But this is one of the most amazing associations. People go there to learn and get certified on how to write the best RFPs, how to write the best proposals. And the minute we were introduced into that forum, we suddenly realized that there's this whole audience out there that needs software to do this, exactly the problem we were solving at Vodafone, and that this was a global audience that needed these problems solved. And there were very few competitors in that specific market at that time, maybe a handful of them. We had a differentiated product. It was the conversations with customers and then kind of the introduction into this association that helped us to see, wait, there's a market here. There's a global market for this. It's growing. And if we continue to build great products and software and we can market into this audience, we can really grow something. And that's how we validated that ICP.
I mean, I think that's really kind of fascinating. And I think perhaps a takeaway for listeners to the podcast, I guess maybe there's two sides to this. One is if your business depends on RFP response, not only might there be technology that could help you, but the person or people driving it could actually be accredited, have some
Yes,
skills that are unique to that business problem, right?
absolutely. I think the first time we went to that APMP event, it was in the small kind of hotel lobby in Chicago. And there were maybe a couple hundred people in the room there, maybe, 3 or 4 vendors presenting. The one we went to in 2025, they took over the Gaylord Opry Hotel in Nashville. It was just massive, thousands of people through there, hundreds of vendors in the space, So RFP responses are a huge pain. Companies of specialized teams handling those critical documents, and they can get accredited and they can use software to solve that problem.
Yeah, but I bet a lot of scale up guys doing enterprise solutions might not have encountered this yet.
Probably.
It's just, to be honest, the first time I've heard of it. I've been around a while, but it's really exciting. I think it's a great kind of takeaway if you're selling to an enterprise and
Yeah,
you're a scale up and you haven't done it before. This might be a way to better engage these very sophisticated buyers.
definitely. Definitely.
So we're still in South Africa at this point,
Right. Right.
and we have a desire to sell more globally and into the US. How how did you recognize that you needed to move from South Africa? What were the challenges that made it clear that something had to change?
Well, we had developed a pretty decent track record in South Africa and then into the UK. The UK was a natural market for us because it was the same time zone, a lot of similarities and crossovers for us. But the internet's global, right? I mean, you can't stop people contacting you from the US, and that's what was happening. This was a unique product offering, and we were getting a lot of inbound interest coming in from the US. And to address that, I mean, but this was like in the early 2010s. We were using things like Skype and those kind of things to try and sell, but you couldn't, and you still can't beat an in-person presentation. So we were on airplanes backwards and forwards from South Africa to various parts of the US every 6 weeks. Myself and one of the other co-founders, we were just basically crossing over, flying across here. We'd also developed a very strong relationship with Microsoft because of the integration that we had into their product. And so we were backwards and forwards on the Microsoft front as well. So we knew that there was strong demand, particularly in the North American market. We had some customers in the US, but it's incredibly expensive for a South African company to be able to kind of crack into that market. Well, get in here in the US where I'm based now. So the first thing we did is we tried to raise some funding in South Africa. And that was really challenging. South Africa does not have a VC market like the US does at all. And so we were talking to, kind of seed funders, private equity funders, lenders, just trying to raise some capital. It took us a long time to actually become successful to do that. But eventually we cracked it. We landed what would be a seed funder by US standards, but was actually private equity by South African standards. They invested in us, gave us our first check, and we could start to hire people in the US to address some of the demand that we were seeing there. Overall, though, the demand just got so great that we had to come across here. We just couldn't spend time on airplanes, and we needed to fund further. So myself, I came across in 2015, chose Seattle because of its proximity to Microsoft, brought our CTO over, and 9 months later, she could develop the relationships with the tech community. I could start looking at the sales and the funding community.
Is that an unusual path then? Is it hard for firms from South Africa or other, you know, non-obvious markets to raise the money to get out of their own geography?
Very, very challenging. Very, very challenging to be able to do that. Firstly, it's incredibly difficult to raise a US investor invest in, let's say, a South African company. I mean, there's so many options that US investors have to invest locally. The added complexity of coming into a country like South Africa, that kind of a deal breaker for many of them. And then the investment community in South Africa is just minuscule. It's really, really small. Even in the UK, it's much, much smaller. And they don't want to invest in South African, tech startups. They'd invest in European tech startups or US tech startups. So yeah, it's a challenge raising. And we bootstrapped most of the times through that period just to try and get there and keep this thing moving until we could raise some funds.
Yeah, because we've had clients who were South African who went to London.
Yeah.
It seemed like maybe it's same time zone and not quite as far from home.
It's true, Ken. But I mean, we thought about that. We were like, okay, maybe build this business in London, but ultimately the US market's the one we want. So why would we take a two-step process? It's very disruptive. Let's just try and go straight to where we want to be and land there, which we were successful in doing.
Yeah, that's awesome. And later on, I want to talk a little bit about how that's transformed the business. Let's talk a little bit about your sales process. So bootstrapping means you guys were leading, founders were leading the sales process. How did you move off of founder dependency for sales? What did that look like, and what are the lessons there? That's a real important time, in a SaaS company development, moving off dependence of the founder for all the revenue generation.
I mean, I think when I look back on it now, I can see all the mistakes that we made through that process, but it was an incredibly challenging time to move from the one to the other. As everyone knows, when you founder led, you can kind of lead the product team to match the demand in the market, the specific requirements. You've got that authority to do that. And while we were still trying to understand ourselves and where we really were going to be successful, we made a lot of starts and stops in saying, let's hire a sales leader, let's hire a sales team, and then ask them to sell a largely undefined product into a difficult market. At the time, we thought that was wisdom in scaling the business. But for those sales folks, they had to be pioneers. They had to be groundbreakers to actually get that right. They had to inform our messaging for us, inform our product strategy. So we had some hit and misses through that process. And I think what happened, to be quite transparent, is that we started founder-led, hired up a sales team, moved back to founder-led, hired up a sales team, kind of eventually like morphed in and out of this founder-led sales kind of approach until we really got confident in our product market fit. Everything became clearer, and then we could start to scale an actual sales team at that point in time. But it was a lot of like backwards and forwards there as we try to just figure that difficult piece out.
Yeah, the product isn't really right.
Yeah,
You need a special sales executive to be able to straddle that requirements gathering and selling at the same time.
absolutely. Yeah, I couldn't agree more with that. And I think for us, what was challenging as well was it was the product, and then we're South Africans selling into a US market. There's a cultural difference as well in the sales approach that we were completely unfamiliar to. When we were doing it ourselves, we had this novelty aspect attached to us where we were kind of different and novel. But the minute you try and scale that through a sales team, it's very difficult to scale. And we're pushing on levers that are maybe not, as common here, and just trying to collaborate that and get that right was difficult.
Yeah, I mean, it's the key thing though. So if you look back now, what are like the 2 or 3 mistakes you wish you didn't make so maybe somebody could benefit from your experience?
Well, I think the first thing we did was we hired sales, and we said to sales, go build demand, right? Go build demand and then close that demand. What we should have done is really taken those funds and invested that more aggressively into the marketing elements of what we did, to have marketing build that demand for us and then scale sales off the back of the marketing demand as opposed to the reverse of that. We did do that. We learned that lesson kind of midway through and changed things up around that. But that was definitely the number one kind of perspective that we changed. The other hit and miss that we had was trying to work with a channel, right? Like independent or resellers of the product. And what was challenging with that was that we didn't know our product well enough. So how could we expect a channel to really know our product and sell that? And that lesson is, until you've really got your own direct sales motion going really, really well, don't try and bring a channel into the picture yet. Get that own direct piece working exceptionally well, then think about scale through channel, but don't reverse that. It's tempting though, right? Because channels can be perceived as slightly cheaper than a direct model.
There is leverage in the channel, but I totally agree. You have to make it as easy as possible for the channel to
Right.
succeed. And if they have to think too hard, they're going to sell something else.
Exactly right. They're going to go where the easy money is.
The other thing I just want to point out is I didn't pay you to say you need marketing to build demand for your sales team. This guy said it here for the first time, but I think it's a really important point that salespeople can't be expected to carry the whole burden,
Yeah.
right? You need to give them leadership across the board. So it's product training, resources for like systems engineering in the complex sale. I mean, there's a lot that goes on in a complex selling situation. And in a very large country like the US, it's real hard for salespeople to get traction without the help of a marketing leader who helps define the ICP really well and starts prosecuting that definition for the benefit of the salespeople.
And I couldn't agree more with that, Ken, because I think one of the pivotal moments for us was hiring a great marketing leader. Great marketing leader introduced marketing tech into the company, like tools like HubSpot and SEMrush and those kind of tools, but then really helped us shape like who's the persona we're going after, where do they hang out, like what is important to them. All right, let's start putting materials to them. All right, now we've got something for the sales team to come in off the back of, versus the sales team just trying to, basically shoot out into those areas there with absolutely no air coverage to support them.
Yeah, that's a great point. So and thank you. I will send you some kind of coupon for that. Let's turn our attention to the impact of getting venture money. I really want to understand how that influenced and impacted go to market for the company. You mentioned when we did prep that it also affected pricing and targeting, and which is an unusual kind of outcome. So let's talk about that. What was the big impact of the funding right around COVID?
We had been looking for US VC investment probably from like 2017 because we'd kind of burned through the original South African private equity money. We were back to bootstrapped at that point, and we knew we needed more capital funding to scale into the US. We had some good traction, good momentum behind us. But we were still a South African company by all intents and purposes, although our head office was in the US, our company was still in South Africa. So we searched far and wide to find a partner, lots of pitches. We found an amazing partner in West River Group who invested in us in 2019, took a real bet on this South African company and helped us to transform as well, to move our kind of primary company to the US. But then we kind of landed on Series A funding, $5 million sitting in the bank. What do we do with this now? At the same time, COVID happened. Right, 2019, the first tranche came in. 2020, April, I think the second tranche of that money came in. And that's right when COVID hit. And it was a confusing time because we had this cash, now we've got scale, but everybody's kind of moving out of the office back to home. Is the world about to implode? We didn't know. So what we kind of sat around trying to figure things out for a while. And then we started to see SaaS just take off, right? Like really in a big way. And we started to hear about peers and competitors who were just like absolutely exploding. And the expectation for us was like, we need, triple, double, whatever it was at the time there. Like we need this explosive growth out of you guys. So in thinking through that, we were very much in this enterprise Vodafone-like companies in the world. And we were thinking, well, how do we scale this? It's really hard to scale this in the enterprise. Let's go down market, right? Let's hire up an army of BDRs and SDRs and pump more money into Google and LinkedIn and Capterra and G2 and those areas there. Hire this BDR, SDR team and start just blasting out into the market. Come up with pricing strategies that fit the SMB, change the actual product to support that market there. That's our path to scale and growth. Well, that was wrong. That's not the way to do it. That's not the way to do it. And we had some growth. There was some good growth in the early stages as we did that, which was almost like a false positive to us. It gave us false confidence in this process. But it just wasn't the right strategy for us to really grow the company in a meaningful way. It was growth and then churn because it wasn't the right customer fit for us. We were just trying to go after that, triple, triple, double, double, and we weren't getting to that point in the right way. So it was a challenging time for us to kind of burn through a lot of cash and get good growth, but not quite the growth that everybody wanted around us.
So what did you do next?
So what we did next is go back to first principles, right? We went back to that persona. We went back to that ICP. We basically pulled all of our pipeline data, all of our customer and churn data, and we said, who sticks with us? Where do we have win rates higher than 50%? Which ICPs and markets really work for us? And as we analyzed all of that data, we had a lot of data at that point, we saw a very clear picture. We win when we're in enterprise professional services companies. That is absolutely the best space for us. Law firms, engineering firms, consulting firms, tech firms, anyone that puts a bio or a resume or a CV into their pitch and proposal, that's where we stick. That's where we win. That's our space. And so we completely reinvented our messaging to direct at that space, reinvented our sales team to direct at that space, disqualified small leads, and changed the way that we approach the market.
So in this situation, the venture investment and the expectations kind of led you off the path, right?
Yeah, I would say that expectation for high growth, which was, yes, it was the VC community at that time, it was the investment community. It was ourselves as well. Like we wanted that growth. We wanted to see that success. And we had money and we'd throw our money at anything to try and get the growth out of it.
Yeah, it's really interesting. We look at recently funded companies for us as good prospects. We're an advertising agency,
Right.
but the temptation to move away from what worked, like from what got you to this point, is very high, and it may not be that you need to do that at all. Just keep doing what worked, right? Just do more of that.
Exactly, Ken. I think discipline and focus is the lesson that I took away from that. Just focus on what works and be disciplined and not chasing the shiny things. If you're consistent in the marketing space, it might take some time, but that consistency is going to get results if you're in a good market with a good product.
So I want to focus you forward now,
Yeah.
if I can, just to kind of land the episode on what's next. So looking ahead, what are the strategies that you're putting out, you're laying out to continue growing QorusDocs in the enterprise space?
AI is definitely, part of that story. I mean, we couldn't have a podcast and not talk about AI and how that's changing.
Hey, we almost did it.
We almost got there, yes. But it's changing the parameters in our opinion. Firstly, we need a big moat because AI is there to disrupt a lot of those kind of like point areas that we may have operated in. And then adoption of AI internally is going to change the economics of our business as well. As we adopt more AI ourselves, we'll be able to do things faster. So our strategy from a go-to-market perspective, it's again, focus and discipline, do the things that work well, and look for peripheral expansion opportunities to expand the market. Back to the good old, Jeffrey Moore kind of bowling pin perspective there. I mean, go to the peripheral markets. But pretty much staying in our lane, do what we do well, do it better, really dominate those markets. Internally, though, we're building AI into everything. We're finding more specific use cases in those markets where our technology is valuable. So, pitches and proposals today, we're adding business cases as another document type that our customers are asking us to please produce those documents. How might we go after those documents? And then looking really intently inside the operational elements of our business, where are there opportunities for us to use AI ourselves so that we're not growing expense at the same speed as we're growing revenue, and we have an opportunity to get back to good old accounting profits and build it from that, kind of operational efficiency perspective with good revenue growth.
It seems also like integration with other things would
Yep.
really help here. So just like you looked at where you won and where you didn't have churn, if we have three or four or 500 RFPs we've responded to, we could then go back if we connect that to our outcomes and really understand what are the elements of the RFPs that were most successful, right? So there's definitely an opportunity to take the data you're generating and apply some AI to that.
Absolutely. And many of our customers actually get feedback directly when they win or lose an RFP down to the actual question level. AI can just mine that information and come back with a perspective for that customer on where they're strong, where they're weak, where they need to improve. It's phenomenal the things that we're able to do now with this technology.
Well, that's a great place to land, Ray. Thanks so much. If people want to reach out to you or learn more about your company, how can they do that?
Yeah, www.QorusDocs.com. That's a great way. Otherwise, reach out to us on LinkedIn. We're easily discoverable there. And just remember, there's no U after the Q in Chorus Docs. It's just QORUS docs.com.
No U after the Q. I like it. If people want to reach me, I'm on LinkedIn/in/Ken Lempit. My advertising and demand generation agency for SaaS companies is Austin Lawrence Group. And if you haven't subscribed to the SaaS Backwards podcast yet, please do so wherever podcasts are distributed. You can also subscribe on YouTube. Ray Meiring, thanks so much for telling the QorusDocs story here on SaaS Backwards.
Thank you, Ken. Thoroughly enjoyed the conversation. Really appreciate you having me on here.